All right, welcome back to the channel. I just wanted to do a quick video here about something that's been in the news considerably over the past couple of weeks, and I'm sure that you've heard of it by now. It's the 50-year mortgage, and there's been so much blowback on the viability of the 50-year mortgage as a strategy to combat the affordability crisis. And we at HouseAble believe that there needs to be some combating of the affordability crisis. There needs to be something to address the issue of less Americans being able to afford homes. And I think there's pros and cons to this proposed solution here. And I kind of wanted to go through some of them and some of our thoughts on them because, as you know, our mission here at HouseAble is to provide home ownership opportunities for middle America, even when big banks say no. And so, by virtue of our mission, we want to get creative to help people afford homes in today's day and age with rising prices, with all of the things that are going on in the market today, because I don't think that the market is going to crash down. And then, even if it does, we have bigger problems than affording real estate if we have a total collapse of the market. As you could probably tell if you look back at history in '08, when there was a housing crash, nobody could really afford much at that time. And so housing prices are going to steadily increase, and that's going to continue to create an affordability crisis. And so that's why we at HouseAble, we come up with creative solutions so that people are given the opportunity to own a home of their own. And so some of the pros of the 50-year mortgage is one of the things that prices people out of the market today, which is a lower payment. And so with a lower payment, a lot of people may now be able to be within the price range that a house that fits their family's needs might be in. And so it increases affordability in that sense. But the alternative to that, the con that everybody is criticizing the proposal for, is there is a lot more interest that's going to be paid at that time, over the course of time, I should say. And so my counter argument to something like that is the alternative to owning a property is renting a property. And when you rent a property, it's essentially like making an interest only payment to your landlord. And so for me, as a homeowner, I rather own the asset and control the asset and enjoy the appreciation of that asset because of the market continuing to grow in value and people being able to transact and things like that. Because as I enjoy the control and ownership of the asset, I will be able to participate in the growth of that asset over time. And so, although not a lot of principal is going to be paid down in the first half of the life of a 50-year mortgage, you still benefit from the growth of the value of the property. And so I just wanted to kind of show some statistics here that the average person holds a property for 5 to 12 years. And what that means is if you hold a property for 5 to 12 years, you will get growth in the property over the course of that time. It's an average of 3 to 5% appreciation per year for any property just across the United States. And of course, that's going to vary from market to market. But if you factor in years of 3% growth at minimum, that means that the value of your property is 15% more than what you paid for it. And so if you were to trade that asset during the course of the average amount of time that minimally people hold their properties for before deciding to sell the property, you should be in a position where you can potentially sell that property and realize some gains from the ownership of that property. And that's not including, there's really not a lot of principal pay down the first 5 years of a loan, obviously, for a 50-year mortgage. Neither is there for a 30-year mortgage unless your interest rates are super duper low. And when interest rates are super duper low, more people buy, and that drives housing prices up. And either way, you're pricing people out of the market. And so in this example, in this proposal, you're going to still benefit from the appreciation of owning a property. And in my opinion, it's always better to own a property for you and your family than it is to rent a property, because you get to participate in that appreciation over time. Because you get to, for the longer you hold the property, let's say it's a forever home and you hold the property for 12 years, now your property is increased, 12 times 5 is 60. So the value of your home has now increased 60% over what you bought it for. And now at year 12, you might be getting a little bit more principal pay down than you were had you sold it at year 5. So just like any other investment, any other asset, the longer you hold it, the more benefit you will see from it. And so I like the idea of 50-year mortgages with a caveat. The caveat is that the person who agrees to take on the 50-year mortgage is also understanding that they need to hold that asset for a certain period of time before they sell it, so that they can capture the appreciation of the property and not put them and their families in a little bit of a bind, to where, and it also depends on how much that family puts down on a property. Because if you put a minimal down payment on a property, on a 50-year mortgage, let's say an FHA loan, when you put 3 to 5% down, if you want to sell that property in a year and the market is, at break even, like right now, the market's not really going up too much, 3 to 5% is the average over time, you might be in a little bit of a tricky situation trying to sell that property. And so I think 50-year mortgages are a potential solution, or a part of the solution, for people who are looking to buy and hold and stay in a property for a prolonged period of time. It is not for people who are looking to buy a property, live in it for a year, and then sell it. Now, you could live in the property for a year, turn it into a rental, and then hold it, which is something that I would do, but most people don't really do that. When they sell a property, they typically are selling that property to get access to funds so that they can buy their next property. And if that's your plan, a 50-year mortgage is not something that's probably going to work out for you. Now, one more thing that's really important to point out here is, just like a 30-year mortgage, on a 50-year mortgage, no one's holding a gun to your head and saying you can't make extra principal payments towards your loan if you want to. So let's say, a year after you get your 50-year mortgage, your job gives you a raise and now you can afford an extra $200 a month to pay towards that principal on that property. So essentially, now you're more in line with the principal pay down of a 30-year mortgage, but you're not obligated to pay that $200 more a month if your situation changes and now you can only afford what your minimum, your regular monthly payment is set at. So it gives you the flexibility to make future higher payments that are contributed towards principal in the event that you take the financial responsibility, if you're financially responsible enough to make those decisions. And so having a lower payment definitely has its value, and being obligated to have a lower payment definitely has its value, with the two caveats that, number one, your goal, your intention should be, you should be thinking about this going into the property. The first thing is, you should intend to hold the property for a prolonged period of time to see the benefits of ownership. The second thing is, you should have an exit plan that doesn't include selling the property in a worst case scenario, to where you need to move somewhere else. Maybe it does make sense for you to rent for a year if you're going to move somewhere else, and maybe turn that property into a rental so that you can get that appreciation of that property, maybe some of that principal pay down, maybe you cash flow a little bit on the rental, meaning that there's more income coming in than your monthly expense on the 50-year mortgage, and you could contribute an extra amount of principal every single month to start to knock down that mortgage and essentially create a savings account for you that your tenant is paying on your behalf. And so it's a good idea for the right person, but for the masses, I could see it being a problem. I could see people going into a deal like this and not having those expectations, not having those things in place, to where they have an idea of what they're going to do down the line. They don't have the contingencies of, they need to liquidate or get out of a property in a fairly quick amount of time. And then they can be in a bind. We've seen a lot of it in the last 3 years where people buy a property and then they want to sell the property, and now they don't have the equity to sell the property. So they have to do things like short sale, or, we come in with a creative solution and we can buy a property subject to the existing mortgage because of their favorable interest rate. But in today's day and age, with no equity, people don't really have a ton of favorable interest rates, because interest rates now are in the sixes and maybe even sevens for, a less than qualified buyer. And so for the right person, 50-year mortgages might make sense. For the masses, I don't see it as a long-term solution, but I'm super interested to hear your thoughts on this. I've done a little bit of research and homework on this. I think that if expectations are set properly, it could be a solution. But comment below what your thoughts are on a 50-year mortgage. If you want to hear more breakdowns like this, where we talk about making homeownership possible on wraparound mortgages, seller finance, lease options, things like that, everything that HouseAble does, subscribe, stay tuned to the channel, watch all of our recent videos. We did one recently and I could link it for you guys in the description and above here, and you can take a peek at it. But we completed a wraparound mortgage deal, made homeownership possible for someone, and they decided it was the right move for their family to get a 40-year mortgage to decrease the payment on that property. Their expectation, though, is that they're going to hold it for the foreseeable future, 5, 10, 15 years. So now it makes sense to do that. So comment below, like, subscribe, and I'll see you on the next video.